Are investment-grade bonds the safe haven for 2020? Investment grade is being touted as the safe haven asset for 2020 as government bonds continue to deliver negative yields, but fund selectors still see sovereigns as playing a key security role in portfolios.Columbia. Threadneedle Deputy Global Head of Fixed Income Gene Tannuzzo describes government bonds as a central bank policy tool yielding next to nothing, which has left investors scrabbling to find assets with stable, high-quality cash flows. Speaking at a 2020 Outlook event, Tanuzzo said, "A critical piece of what we're looking for in 2020 is the asset where the cash flow is stable enough that we have confidence it will be there through a cyclical downturn. That may not be a government bond anymore, that may now be an investment-grade bond and may even be a less cyclical BBB-rated security that can provide that safe haven." Tanuzzo believes the answer lies in less cyclical areas of the investment-grade space, particularly in Europe, including some of the large telecom companies and even UK utilities. If we look at the regulated issues there, we feel very good about the stability of those cash flows, particularly in an environment where eurozone corporate bonds are being purchased by the ECB directly. Improving high-yield outlook. Tanuzzo says aggregate credit risk has dropped for the Columbia Threadneedle Credit Opportunities Fund, but while cautious on high yield, he is not overlooking the asset class altogether. This is because an increasing number of BB-rated companies have started to make improvements to their balance sheet. If they can get that BBB- rating from S&P or Moody's, all of a sudden the ECB can start buying those bonds, he says. Those rising stars from high yield to investment grade are still outpacing the downgrades into high yield from investment grade, and we try to be positioned for that too. The Columbia Strategic Income Fund has 24% exposure to BBB credit and 13.8% to BB. Columbia Threadneedle Multi-Asset Fund Manager Maya Bandari says the team is using credit as a protection or anchoring asset for the multi-asset portfolios. "I suppose the nice thing about a bond is you're showing what you're being paid, but with yields as low as they are, you're not being paid a huge amount for diversification. So, in the UK for example, in short-dated corporate bonds are something that we use to diversify. Fixed income demand wanes. Last word research has found demand among UK fund selectors for fixed interest assets waning between Q2 and Q3 this year. For government bonds, net demand, buyers minus sellers, dropped 10 percentage points between the two quarters, from a net 5% to minus 5%. Developed market corporate bonds meanwhile suffered a 13 percentage point drop, from 2% to minus 11%. Appetite for developed market high yield among UK fund selectors has been. For more on this story, visit the news article link.